Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about Ideanomics once more. I'm going through a lot of things here, including any updates that we have received, their earnings, some of the outlooks to come for 2021, what to expect further on. So let's jump right into this one. And don't forget to watch it to the end. So Ideanomics here, what we're seeing is on the last quarter, some amazing updates that we have. And if you haven't heard about Ideanomics ever and haven't caught many of my videos previously, by the way, the previous one is in the description below. This one here works as a holdings company. And it works something like this. You have Ideanomics, which is a US Nevada company, and it has three technologies in Malaysia, Medici Motor Works, and then you have all these other ones, Grapevine, Logix, Intelligenta Limited, Mobile Energy Global Limited, Fintech Village LLC, Delaware Board of Trade Holdings and Corporations. By the way, I have an update on that one here as well at the end. And each of these have different companies underneath, and it kind of works as this organizational chart. And so it's not just one company you're getting all these companies into one holding of a company called Ideanomics. And to make it a little bit shorter, this is their company portfolio, and it really dives into two things: EV and Fintech. And when we're looking into their updated presentation, I'll dive through the SEC filing and numbers and crunch into it and transcripts, but let's just jump right into the presentations in case you missed this one. And so currently their market cap is around roughly $1.2 billion, but the amount of cash they have is around $330 million. Keep that in mind because this will be very, very important, the $330 million. Again, this is the cash as of quarter one. And so for Ideanomics, they're looking into targeting, as I said, Ideanomics Mobility, which is EV, and Ideanomics Capital, which is a fintech part of the company. And Ideanomics Mobility has MEG, and then as well Tree Electric, and then Medici Motor Works, Solid Track, and Energico. And in terms of the mobility, the fintech, we're going to go through that in a second. And so 2021 is considered the year for EV. From the perspective of Ideanomics, EV sales will reach 1.2 million units in 2023 with a CAGR of around 33.4%. And moving on, you also have the vehicle and battery sales, and this is for the Ideanomics S2F2C model, which is sales to financing to charging. You have also finance and leasing, insurance services, and charging energy services. And this really dives through two things. So their EV industry itself and the charging part of the EV industry itself. And if we were to look into the Wave here, it's the only wireless charging truly addresses the market opportunity for autonomous vehicles, proven wireless charging solutions, active in commercial installations and made in America, 50 kilowatt to 380 kilowatt deployed and available around 500 kilowatt and 1 megawatt progressive testing. And 2020 revenue is around $7 million or more than that, active in 2021 deployment and installation with bold 2022 outlook and beyond. So it's integrated Medici Works vehicle programs available globally. And you also see that they are also available to be sold in North America in 2021 and beyond as a zero emission commercial vehicles. And as well, we're moving on. They're showing some pictures over there. And Charging as a Service, CAAS. And this is an innovation for the fundamental differences between US, Europe, and China, which inductive charging will become more prevalent across US and Europe. And so the customers pay per mile to keep their EV fleet powered, and they don't need to worry about upfront investments in charging equipments, maintenance costs, or energy costs to power their fleet. Second, inductive charging allows for the vehicles to top off charge rather than let the battery drain and charge up. And for the third part, Wave charging delivers charging hands-free and fully automated and the fastest in-route time to charge available. And we can move on as well to the Tree Electric, Energica. You get to see 100% electric high-performance motorcycles, Solid Track, which this one might be very interesting if they do manage to get autonomous EV industrial vehicles, such as ones cutting grass around the side of the roads, etc. And then you'll have Ideanomics Capital, which is Timios, Dbot, Liquify, Intelligenta, and Technical Metals Market. So for Timios here, bringing real estate processes to the 21st century, and there's over 95% client retention rate over the last 10 years, with more than $60 million in revenue for 2020 alone. So that's quite massive. Now, quarter four and the year highlights, or financial highlights, you have $166 million in cash at the end of the year and $330 million today, providing a deep pool of capital for investments in our business, sequential quarterly growth in our revenue during 2020, and the first sales of charging and battery system key elements of our S2 F2C model. And you get to see that quarter 4 is on par with quarter 3, a little bit of an increase there in terms of revenue and gross profits. And comes in as well towards the future for 2021. Here's where things come exciting. And before doing so, I need to mention just some of the highlights there. Or actually, we did mention the highlights, including acquiring of Timius Holding Core in January 2021. But there's a couple of things I want to talk about. One, their digital currency mentioning in 10K, or their earnings itself. And so a lot of people have been questioning Ideanomics' link with cryptocurrency, and here we have a part just dedicated to digital currency. The company may from time to time enter into transactions dominated in the digital currency world, which may consist of GT dollar coins, GTB, Bitcoin, Ethereum, and or any other type of digital currency. Digital currencies is a type of digital assets that is not a fiat currency and is not backed up by hard assets and or other financial instruments. As a result, the value of digital currencies is determined by the values of variable markets itself. Okay, so we're going to move on from there. In the year end December 31st, 2019, the company entered into a transaction in which it will receive which it has received 8.3 million GTBs value at the time, which is $61.1 million on October 29th, 2019. GTP has an unexpected significant decline in quoted prices from $17 to $184. This decline continued through the fourth quarter of 2019, and on December 31st, 2019, the quoted price was 23 cents. As a result of the decline of the quoted price and an inability to convert GDP into other digital currencies, which were more liquid or fiat currency, the company performed an impairment analysis in the fourth quarter of 2019 and recorded an impairment loss of $61.1 million. And so that's part of their loss there. That is the only mention of cryptocurrencies itself. And so they might have a little bit of a bad feeling or a bad taste in their mouth regarding cryptocurrencies, especially after losing somewhere around $61.1 million. And we can move on as well now towards their revenues. So 2020 to 2019. So a big part of this as well was $61.1 million in the cryptocurrency part. So really, in order to get the net loss perspective, take into consideration that perhaps 106 million compared to something like $35 million because of that cryptocurrency. And you get to see that their losses in 2020 are massive. Of course, given to that a big part of it would relate towards the business itself has completely changed from 2020 to 2019. Different acquisitions, different operations. So we're going to cut them a break here. And then moving on as well. Some of the impairments losses relating to GDP cryptocurrency here, $61 million in 2019. Equity method investments, you're looking that it's somewhere the same as 2020 and 2019. Intangible assets, you're looking at 20 million compared to 5.7 million. Again, as I was talking about, asset acquisitions. What else are we looking at? Basically, it's on par as usual, other than the intangible assets. And then we can move on towards one thing that caught my attention, which is the transcript that we've received from them. And this transcript had some good questions. So for instance, when is the time frame of when the Delaware Board of Trade might be operational? And the CEO replied, "Thank you for the question there. The Delaware Board of Trade is a very valuable asset to us. We've recently applied for some licenses, CMA approvals. As I mentioned in the prepared remarks, there's a lot of very interesting conversations going on with DBOT that we hope to be able to speak on in the next quarter or so. So that's a big PR that might be coming in our way. We'll obviously bring updates to the market on that as soon as we can, but suffice to say there's a lot of interest back in the particular sector that we originally bought the assets for, and there's ongoing conversations that I can't speak on any further at this time, but watch the space." And then the next one. So I wanted to ask a little bit about the cross-portfolio synergies, particular in Ideanomics mobility. Can you maybe frame out for us how this business strategy is leveraging the assets in the different businesses that you've added into this portfolio? How does this accelerate time to market or maybe make it easier for business development of these different entities? And the reply there went as, "Thank you for the question. So I'll give you a very good example. Right now, we have significant orders in hand about Trilatrix in Malaysia. And we received a purchase of a very large purchase order from an Indonesian bike distributor, which will require us to begin servicing the first order of about 10,000 units, from which with supply chain maybe around Q2, but more likely in July onwards of this year. That's obviously an enormous order, and it will be the largest order Triletric have received to date, probably one of the largest EV bike orders. I believe there's probably been globally to date. So if you take a look at Energica Motorcycle Investment, that is a company with battery and charging technologies. The Triletric bikes are battery agnostics. So they've come with batteries and charging equipments from different manufacturers based on different markets we sell them in. So we placed investments into Energica as a part of series of conversations we had with them regarding their ability to help us secure supply chains for batteries and change our charging equipments for Triletric. So I think you can see quickly, when you're going to do that level of business for a company like Energica, why would we want to obviously begin a conversation with them around making the investments in their company as well? So that's probably a really good example of something that shows synergies across platforms, and Triletric is one of ours and is going to be one of our real revenue drivers in the second half of this year. Again, things are starting to look really bullish on there. And we do have another question regarding the T70 and T-Express and the Triletric makes similar vehicles there. And they do talk about the orders again with the price range of different price ranges running around almost 1,000 to 1,500. And then as well, you're looking at 10,000 bikes. They mentioned that's around 13 million to 14 million as a starter. Did I get that right? And they're, yes, absolutely right. So, that is a little bit of an estimate to where our money is going to be coming from in the second half, at least, especially with that 10,000 bikes. It seems that is a big part of what they're going on in terms of the questions later on. And before we move on towards institutional investors, if you'd like to see more materials like this, make sure to subscribe and leave notifications on. And so in terms of institutional buyers, what we're seeing is that things appear to still remain stagnant there, nothing going on further. So we're going to move on towards technical analysis. Now, on the 1 week perspective, things are looking very interesting here because it's in the trading action zone between the 10 SMA at the top and 30 SMA at the bottom. And that's between 357 and 259. Positive reversals are most likely here. And so the next thing we're looking at as well is that when it comes in towards the average directional index, we're seeing here that this might actually be a part for a bounce later on. Nothing significant there. MACD is sliping down a little and momentum is going around almost zero. So things are looking still interesting, but we need to look into a 1 day perspective. And on 1 day perspective, we see this MACD that is gone positive, indicating the possibility of this positive reversal. Again, it needs to close above 316 or get above 316 to escape the bearish trading action zone where negative reversals are likely. In terms of momentum, we're seeing here momentum is actually positive in this side, and that's a good thing from where it was on negative part. And next, we're looking into the moving average bands. We're looking at the top around 346 in the off the Bollinger Band and the bottom of 259. So that's the bigger ranges where we're expecting it to trade. Now, in terms of an accumulation par or just a moving average band, we're expecting that to trade on the top 33 or 3.33, in the middle 302, and in the bottom 272. When it comes in towards stochastic fast and stochastic slow, both are showcasing that there is a very strong potential for this one to move forward and further on. And in terms of the chart, we're seeing a Fibonacci strong support levels at 295, 234, and 159. Significant resistances are 359, 443, and 553. And so if we were to look into a price line action, we're seeing a significant support level sitting currently at 313, below there the $3 level, below there 282, below there we're looking at 269, and then dropping down all the way to 240, and then down to 202, and then to 176. And then when it comes in towards resistances, we're seeing a good amount of them. So the current resistance level is at 345. That's a very important one. Above there, 379, 423, 457, and then we're looking at 491 and 531. Comes to the question to Ed, what do you think about this one? Well, keep in mind that this one is going to continue to burn in money in cash because as we've seen, especially in the last quarter, yes, we've seen more revenues, still costs are a little bit higher, but looks like a lot of that was put into infrastructures and assets that will bring more revenue as we go forward. So thus, the intrinsic value and the potential sales in the future will rise, and it will be more bullish moving on forward, and it gives us a better outlook for the year to come. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.